Bitmine Immersion Technologies, ticker BTM, is currently trading at $52.47. That is a sharp drop of $6.63, putting it down a staggering 11.22% on the day. Now, for many watching this unfold on their Robinhood app, the immediate instinct is to see this as a classic crypto-related stock sell-off, a simple reaction to Bitcoin's volatility, and perhaps a knee-jerk buying opportunity. The expectation is that BTM is just a leveraged bet on the price of Bitcoin. When the digital asset sneezes, BTM catches a cold, and when it rallies, BTM soars. That's the simple story, the one that's easy to digest. However, the reality of what's driving this 11% plunge is far more intricate and speaks to a deeper stress test happening within the entire crypto mining industry. This isn't just about the spot price of a cryptocurrency. It's about the brutal economics of hash rate, energy costs, and the operational efficiency that separates the winners from the eventual bankruptcies in this space. What we're seeing today isn't just a dip, it's the market actively repricing BTM's ability to navigate an increasingly hostile competitive landscape, something that sophisticated investors using platforms like interactive brokers are watching with extreme caution. The common belief, the one that likely has many traders hitting the buy button on SoFi Invest, is that Bitmine Immersion is a straightforward growth story. They are in the business of mining Bitcoin, and the narrative has been that their immersion cooling technology gives them a significant edge. This technology, which involves submerging powerful mining computers in a specialized liquid coolant, allows them to run their hardware harder and longer than traditional air-cooled setups. The expectation is that this technological moat will guarantee superior profitability. But let's challenge that assumption directly. While the tech is impressive, its economic advantage is not a constant. It is a variable that is highly sensitive to external pressures. The reality is that this 11% drop is likely being driven by whispers and data points that suggest the competitive field is leveling faster than anticipated. Competitors are securing massive energy contracts at rates that might neutralize BTM's efficiency gains. Or the global hash rate is climbing so aggressively that the slice of the pie for every miner is shrinking, regardless of their cooling method. This is the kind of nuanced threat that doesn't show up in a headline, but is reflected in a sudden, high-volume sell-off like the one we're witnessing. People aren't just selling a Tesla stock or an Apple stock because of a bad news report. They are repositioning based on a fundamental shift in the industry's core profitability metrics. This is a critical distinction for anyone considering online investing in this volatile sector. Let's dissect the recent trading activity more closely. The volume accompanying this 11% decline is substantial. It's well above the daily average, which tells us this isn't just a few retail investors getting spooked. This has the fingerprints of institutional selling or the unwinding of a large position. This isn't the kind of light volume dip you might see on a quiet day. This is a statement. Looking at the order flow, we can see large blocks being sold at key technical levels, breaking through support that had held for the past few weeks. For someone managing their portfolio through a service like Fidelity Wealth Management, this is a major red flag that warrants a re-evaluation of the position's risk profile. It's also happening in the context of broader weakness across other Bitcoin mining stocks, but BTM's drop is notably steeper. This suggests the market is penalizing BTM more harshly, perhaps due to a higher valuation coming into the day or a specific concern about their upcoming operational reports. Many who practice self-investing see these moments as pure noise, but the reality is that the market is communicating something specific about the company's perceived strength relative to its peers. The question is whether this is an overreaction or an early warning signal. Is this a moment to add to your individual brokerage account, or is it a sign to cut exposure? This kind of decision is what makes investment help so valuable, whether it comes from an advisor or a deep understanding of market dynamics. For those less familiar, Bitmine Immersion Technologies Inc. operates large-scale data centers specifically for mining Bitcoin. Their core business model revolves around their proprietary immersion cooling systems. Instead of using massive fans to air-cool thousands of computing rigs, they submerge them in a non-conductive fluid. This method is exceptionally effective at dissipating heat, which is the single biggest byproduct and limiting factor of cryptocurrency mining. The benefits are threefold. It can extend the lifespan of the expensive mining hardware, reduce noise and infrastructure costs associated with air cooling, and most importantly, it allows the chips to be run at higher speeds or overclocked, thereby increasing their hash rate or computational output per unit of energy consumed. This efficiency is their main selling point. In past quarters, the company has shown impressive operational metrics, often boasting a lower cost per coin mined than many of its air-cooled rivals. This historical performance is the bedrock of the bullish expectation. However, past performance is not indicative of future results, especially when the variables of energy cost and global mining difficulty are constantly in flux. Many investors might hold BTM in diversified fidelity ETFs focused on blockchain technology, hoping to capture the sector's upside, but today's move is a harsh reminder of the single stock risk that exists even within a broader theme. Looking ahead, the future of BTM is a story of immense opportunity shadowed by significant risk. The primary catalyst on the horizon is the next Bitcoin halving event. This is a pre-programmed update to the Bitcoin network that cuts the reward from mining a block in half. This event dramatically squeezes the profit margins for all miners. The expectation is that this will trigger a culling of the herd, where only the most efficient, lowest-cost operators will survive and thrive by capturing the market share of those who are forced to shut down. This scenario plays directly into BTM's core value proposition. Their immersion cooling technology, in theory, should make them one of the survivors, positioning them for immense growth in a post-halving environment. This is the narrative that keeps long-term bulls invested through the volatility. However, the reality presents a number of potent risks that could derail this outcome. The most immediate risk is the price of energy. A global spike in electricity costs could completely erode the efficiency gains from their cooling tech, making their operations unprofitable regardless of their technical edge. Another major risk is the relentless increase in global hash rate from state-sponsored operations or massive new facilities coming online, which could suppress profitability for everyone. And of course, there is the ever-present regulatory risk, where a government could crack down on mining operations, creating an existential threat overnight. An automated system like Schwab Intelligent Portfolios would likely have a very limited, if any, allocation to such a high-risk asset, highlighting the difference between a diversified managed approach and a concentrated high-stakes bet. For all the different investing sites out there, this is a stock that requires constant monitoring of industry-specific data far beyond a simple price chart. Do you think the upcoming Bitcoin halving will be a net positive or negative for mining stocks like BTM? Comment below with your take. In conclusion, the brutal 11.22% drop in Bitmine Immersion Technologies stock to $52.47 is a powerful lesson in expectation versus reality. The surface-level expectation was that BTM is a simple, tech-advantaged proxy for Bitcoin, and this dip is just market noise. The deeper reality, however, is that this sell-off is the market's way of stress-testing BTM's true economic moat against a backdrop of escalating competition and macroeconomic pressures on energy. The company's future hinges on a critical question. Is their technological edge in immersion cooling significant enough to insulate them from the unforgiving economics of the global mining industry? The bull case rests on the belief that the upcoming halving will reward their efficiency, while the bear case fears that external forces will render that efficiency moot. What looked like a simple buying opportunity is, in fact, a complex referendum on the company's entire business model in the face of a rapidly maturing and increasingly competitive industry. This is the kind of critical analysis that separates a casual online investment from a strategically managed one, whether you're using Fidelity, Interactive Brokers, or any other trading platform. Be sure to like, comment, and subscribe for more finance